My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Do my friends just trying to make a little money. My job is not just entertainment, but put days like today into some sort of context. So call me 1-800-743-CNBC. Tweet me, Jim Cramer. Look, it was a heck of a lot easier to own the stock of Nvidia when hardly anyone knew about it. Once you get this big to the point where you become the entire fulcrum of the stock market, you're going to have a target on your back, and that is exactly what I think happened tonight to the stock after Nvidia reported a fine and dandy set of numbers, because fine and dandy is no longer enough with this incredible company. Now, we know the pre-quarter jitters of National Nvidia Day weighed on the averages. Dow declining 159 points was worse. S&P losing 0.6%, NASDAQ tumbling 1.12%. And now with the stock sinking after hours, we could be in for a hangover from what they're already calling Nvidia's buzzkill quarter. But they happen to be like the people having an Nvidia watch party. Yes, there was one. There's nothing to celebrate here. Move on. All right, let me just inject a note of sanity to pinprick all the insanity about this amazing company. Nvidia just reported a stupendous quarter. 122% revenue growth, for heaven's sake. Adjusted earnings per share increased 152%. Company announces a $50 billion buyback. $50 billion here, $50 billion there. Come on. Yet it's still sinking in after hours because the expectations got out of hand. Worse, Nvidia has become overly important to the fate of the entire stock market. That even I, who once named my dog after this company, think it's all gotten to be too much. We know that artificial intelligence is the way of the future. We also know that Nvidia is the best play on artificial intelligence. In the end, though, Nvidia has become an albatross around the market's neck because no one stock can be a proxy for the future of the S&P 500. Yet that's exactly what happened as Nvidia romped from around $500 billion in market cap just 18 months ago to more than $3 trillion now. Maybe after tonight it will shed that millstone, that albatross. You know what? That would be a godsend for all of us. Why is the Nvidia apotheosis wrong? Because business is a funny thing. Today, before Nvidia reported, we learned that a client of the firm, an important one, Supermicro, will delay a key SEC filing because it needs more time. Now, this is something that's always going to be viewed as negative, especially because a short seller dropped a devastating series of allegations against the Supermicro just the day before. This is Supermicro we're talking about, not Nvidia. But is it also negative for Nvidia? Do you think any of the people who are new to the stock bothered to ask whether Supermicro's delay has anything to do with Nvidia's future? It was strictly shoot first and then ask questions later. What was truly incredible, though, was how the contagion rapidly spread to the rest of the tech world. All the semis that I follow, almost every company involved with enterprise software, thank heaven, Salesforce reported a good number tonight. Now, the quarter itself, the actual Nvidia quarter that was reported, by that point, it felt like insult added to injury when there was no injury to Nvidia. The company will muddle through and recharge. At its next iteration, Blackwell goes full bore, and we see renewed expectations. I hope they don't get excessive like they were tonight. And you know what? I just hope this is it for National Nvidia Day. Can we just call that a day? All right, what is the solution to hang on every Nvidia word? It's simple. It's as plain as the nose on your face, or at least a letter purloined and posted right in front of you. The solution is perhaps the most boring part of investing. I'm talking about diversifying away from nothing but tech. We often say that diversification is the only free lunch in this business, but the reality is diversification is a total drag. Why would anyone ever want to own a stock of a bank or a defense company or packaged food place, especially with the GOP-1s? On most days, these stocks are just ballast or a bunch of disparate entries that are unconnected to Nvidia or Supermicro or even Microsoft or Amazon, to name two key partners of Nvidia that are also sinking tonight. And on days like today, they don't do all that good a job of buffering the tech weakness. That's okay, though. There are going to be days where all you want to do is lose less than the market. That, plus the cash you have on the sidelines, are not necessarily meant to help you make money regularly. They're meant for something bigger. They exist to keep you in the game when the hottest stocks turn cold, like Nvidia has done. They prevent you from being so disillusioned, so bummed, that you throw up your hands and say, I can't take it anymore. Something that you might easily do if you only own the stock du jour, which sadly fits the bill of this unbelievably good company that is Nvidia. As someone who runs a diversified portfolio for my charitable trust, I've spent the better part of the rally coming into today raising cash, as I said we do, after we saw the work of the wonderful, incredible market historian Larry Williams, who's retiring. He said this period should be one of the worst for stocks, so we started ringing the register. He said that this would be a period that would be really horrible for Nvidia, so we didn't encourage people to buy it. It was so hard to part with anything as the market went higher. It was hard not to say go buy Nvidia every day. But our discipline says to sell a market that's overbought like this one, and our discipline said do not tell people to buy Nvidia ahead of the quarter. It's just too steaming. Our discipline says to own stocks like Stanley Black & Decker, which was featured positively in today's Wall Street Journal, or Wells Fargo, a bank stock that's been riding the wave of lower rates. It's why the trust owns Costco, which has nothing whatsoever to do with tech, yet has been an outstanding performer. It's why we constantly proselytize for Eli Lilly, because we believe this drug company can be the first non-tech stock to hit $1 trillion valuation. Costco is levered to its membership dues. Lilly's all about the revolutionary weight loss and diabetes drug. More on that later. Now, in the end, there's no denying that if you own any stocks, especially tech stocks, that were smacked around in the wake of National Nvidia Day. Sell. Hence, you need to have some cash on the sidelines. But days like today are the price you have to pay to try to get rich in the stock market. And make no mistake, if you own Nvidia for the last several years, well, you are already well on your way, or you should be there. The bottom line, I always tell you to own Nvidia, not to trade it. I am not going back on that. But I don't think that's possible unless you have a diversified portfolio as well as some cash on the sidelines so you can handle a stock like Nvidia. They allow you to stick with Nvidia even when it's getting clobbered like it is tonight. They allow you to stay sane and still own stocks. They don't block the exits. They keep them open for an orderly departure for a correction after a big run. Sometimes that's enough to help you absorb the pain from days like today and perhaps tomorrow. Even on National Nvidia Day, what do? We take questions. Alex in New York. Alex.
Booyah, Jim. Pleasure to be on your show. Longtime fan. Just wanted to ask you what you think on Berkshire Hathaway.
Berkshire Hathaway is what I call an up stock. It's been that way since Leon Cooperman first told me about it in 1983 and 84, and it remains an up stock even today. Okay, look, if you stick to diversification and have some cash on the sidelines, then it's much easier to own red-hot stocks like Nvidia, and you can absorb the pain that was felt across the tech sector today. Mad Money tonight. Salesforce is on the move after earnings. I'm sitting down with CEO Mark Benioff, fresh off its report, and that's a tech company that did well, but it came in cold. Then what do we do with the recent batch of retail earnings signal? What are they signaling for you, the consumer? I'm investigating. And a firm just reported after the close tonight. I'm crunching the numbers for that red-hot beacon of a buy now, pay later stock. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.